Hi, Dean Jenkins from FollowMeTrades.com, and this is the market update for the week coming up of May 9th, 2016. I'm recording this on Saturday, May 7th. Tomorrow is Mother's Day, and I just want to wish any mothers who are listening, thanks. You're the best, and hope you enjoy your day and that those around you honor you and recognize you. And anyone who has mothers and you have forgotten and haven't done anything yet, there's still time. Don't mess it up. Well, we're at a really pivotal time right now where the market's going to tell us what it's going to do pretty quickly here. Before we get into the charts, because I think there's a clear picture and a clear story here in the charts, let's look at a couple articles and headlines and just have some fun with that. So here's a Forbes article by a guy named Larry Light, and Larry says, why there's no bear market in sight. Well, Larry Light could be right, but he's not. He goes on to make a fundamental case here in the article, I think a pretty weak one, about why there's no bear market coming and it's going to just be amazing and new highs and all that kind of stuff. Well, we'll look at that on the charts here in a minute. Here's another optimistic article about the market going up from Reuters. And it says, if the trend stands, consumer stocks to boost the market. Now, they do make an interesting point in this article that Q1 earnings, 80% of companies have reported, but most of the retailers have not, and that the retailers could really move the market. And that's an interesting insight. Now, the article headline says if, but when you go read the article, the author really says when. The author says retail sales are going to come in strong and they are going to boost the market. Well, that's a big assumption, but they could move it. And we'll look at the economic calendar here in a minute and see when consumer sales are coming out. And again, lots of retail companies reporting earnings this week, and that could have a big impact on the market. You know, if they have strong results, it could move the market up, but not very much. And if there's a huge expectation, which there seems to be, that they are going to be good and they're not, the results could be dramatic the other way. So we want to be ready for that. Here's another fun headline. This is from the Telegraph in the UK. And just a great headline. It says, the U.S. election is unlikely to fuel a stock market boom. Yeah, do you think? The presumptive nominees here, I don't think the market would be excited about either of them being president. So it's hard to create even some kind of speculative scenario about how either one of these people getting elected president is going to bring all kinds of confidence and enthusiasm and boost the stock market up. So I think the Telegraph may actually be absolutely right. Very little economic data being reported this week. You know, Monday, Tuesday, nothing of importance. Wednesday is the petroleum status report, and that certainly impacts oil, and oil's been having an impact on the S&P 500. We got jobless claims on Thursday, and that, depending on how that comes, could have an impact. So here on Friday, this is probably the big deal. Retail sales. That's been a fairly strong sector so far. And if, again, earnings come in a little weak for the retail folks reporting this week, and if the retail sales come in a little weak, that could have a pretty dramatic impact on the market. So maybe towards the end of the week, we will see some volatility and some price movement. So we'll have to wait and see. So after all that speculation and all that kind of stuff, it's fun to retreat. It's comfortable to retreat back to the realities of the chart, because this is what tells us what's really going on. This is the S&P 500 index on a weekly chart showing this. You know, we've been in this bullish trend. This bullish trend was ongoing for 5 or 6 years, and clear signs that it has changed and is heading down. You know, just using simple Dow theory. You know, Dow theory says we are in a trend when we have a series of higher highs, higher lows, higher highs, higher lows. You know, that's just been going on ad infinitum. And it says the trend has changed when we start putting in lower lows, lower highs, lower lows. So far, lower high here. And so just if you just stand back and look at, you know, a normal market cycle, it really looks like we are getting ready to turn down, and it continues to prove that. And if we do, just to refresh, the targets for the S&P 500 over the long term through this year and the next year are in these Fibonacci retracement zones of 38.2 to 61.8%. It's in this region here, which takes the S&P down to 1644 to 1343. That is the high probability outcome based on the technicals. Even if this were wrong and we were to go make new highs, the probabilities are going to be pretty thin, right? Very, very small before the market eventually does turn down, and it will turn down. That's just the normal, natural cycle of things. That doesn't spell doom and failure. Market moves in cycles. It always has, and it continues to show that it does. I wanted to show the NASDAQ composite too, and this, same exact pattern, massive trend, and then lower lows, lower highs. Even more dramatic picture here on the NASDAQ, and often that leads the major indexes. We put in a lower high, and it looks like we're heading down again. Here in the retracement zone on the NASDAQ, same thing, Fibonacci retracement. And in this case, it is 38.75 down to 30.39 on the NASDAQ. So now this is the S&P 500 again, but this is on a daily chart, so a smaller time frame. And so those moves that we saw on the larger time frame chart, these big moves here, we can amplify just a little bit. Back last summer when the market dropped pretty dramatically, we saw that coming with lower lows, lower highs, lower lows, lower highs, boom. And it happened again at the end of last year. We had been talking about that and calling that out. And look what's happening again here. Now, even if we get a pull up, it's got to go put in a new high to say that this isn't happening. The high probability is it is happening. And even if we go, a few days or a week or something up and don't take out that high, and then it reverses down, down it goes. And probably going to take out this low here and go even lower. So that's what I'm looking for. And the retail sales could determine whether it takes out this high or whether it goes and puts in new lows. So it'll be interesting to watch. So here's gold. And gold is, man, it's just on a tear, isn't it? It put in new highs this last week, early in the week. And, we had said if it crossed 1113 way back here that this recovery was underway, and boy, it sure is. And it just goes on to put in new highs. Now it'll correct at some point a little bit, and eventually this will probably be a wave 3 and then a 4 and then a wave up to the target levels that we have established on the larger time frame, and we can just review those really, really quickly here. On a weekly chart, the target zone for gold is up here, 1347 to 1532, and that really still looks like it's valid and underway. It may again correct before it, once a minor correction before heading up there, but through this year and next year, that's still the very valid target for gold. And we'll stay on the weekly chart here as we look at oil. Again, the recovery. So this is a massive impulsive move down. That's a wave 3, and recovery in oil. Still really, really looking high probability that it's heading up 63 to 84 dollars a barrel in the futures contract range. It just gets clearer and clearer the farther we go on here. Here's a daily chart. You can see on the daily chart, in this recovery, we continue to make highs, higher lows, new highs, higher lows, new highs, and this pattern really looks like it'll just continue on up into this zone here. Well, that's it for this week. Really no news coming out till the end of the week, and then it could be a big deal. Retail earnings could have a big impact on the market, and we will have to see how that plays out. I think the probability from technical analysis is that the market's going to head down, and there's really just looking for what the trigger for that will be. And the market will tell us, and we'll see, and we'll trade accordingly. We make money either way. We go long when the market's going up, we go short when it's going down, and even when the market's going down, there's things to go long on. So our stock pick service is doing great year to date. We're about 20% ROI on the portfolio, high win rate, and we're enjoying it. It's all based on trading the realities of the chart and what the market is telling us. All the fundamental information out there ultimately gets distilled down into what people are doing, what investors and traders are doing with the information, how they're acting on it, and that's reflected on the charts, and that's what we trade on. All right, take care, be safe, have a great Mother's Day, and we will catch you next week. Thanks.